Good morning, folks, and welcome back to episode 1109 of ALMUS Market Mornings. So, as President Trump himself said, the Iran ceasefire is on life support. Both sides are unwilling to budge. There is a big oil supply shortage building up as the strait remains closed. What's interesting is that usually in the past, oil shocks result in spare capacities coming online, but unfortunately, spare capacities are largely located in the Middle East. So, this hasn't been mobilized this time round. So all drawdowns are happening via either floating storages, that is on-sea purchases via oil already on ships, or via release of the strategic petroleum reserves. Essentially, longer this disruption goes on, the longer it will take for oil to stabilize. On the other hand, risk assets seem to be doing fairly well on the back of the AI trade because there is a general expectation of heavy spending related to the AI infrastructure. Good morning, JK. Market moves seem to be a bit more supportive of risk. What is your reading of these recent moves?
Morning, Swaraj. Yeah, I think there is risk taking, but the risk taking is restricted to only some pockets of the market. So currently, if you see, AI is a major game in the town. Uh, Investors are encouraged by the strongest earning growth story that has been seen recently, the largest cap spending cycle also seen. In fact, for quite some time, investors had stayed away from AI due to factors like bubble-like situation, experts pointing to a froth in the market, etc. But however, the recent strong earnings report and simultaneously the world economy stocks are companies following challenges due to inflation, possible interest rate hikes, and supply chain issues. Now the entire hot money is flowing into this sector, and that's what you are actually observing in the stock markets, particularly in the Nasdaq and some of the markets like Korea, Taiwan, and all. Parabolic moves are seen in these markets. And if you look at the market cap, Dow Jones now has about 20 trillion of market cap, and Nasdaq commands about 35 to 40 trillion. And if you look at globally, if you include all the chip makers, cloud platforms, and all the software related and AI beneficiaries, the uh, market cap is at around a staggering 45 to 50 trillion dollars. So it's become a huge market. And markets, of course, are concentrating on only one market because they are not confident about the bond market. They are not confident about the world economy stocks. The real bubble may be just starting to build, but it's still too much of money chasing it. So the overvaluation may continue for some more time. Yes, as I said, on the war front, we have actually from deal optimism, which was seen earlier last week, to a resignation of a no deal is building in the market. So oil prices continue to trade higher, and countries dependent on oil are again bearing the brunt of it. India, one of them, Japan, many Asian countries also. If you see, their currencies are weakening and the stock markets are also weakening. Now, the as I said like yesterday, also the gulf between the US expectations and the Iran expectations seem to be very difficult to bridge right now. It may require a long period of negotiation before those things can be, addressed by each other. Therefore, I think the deal looks too far right now, unless there is some sort of a magic. Let's People are also thinking that in the upcoming Trump Z meeting on 16th of this month, there might be some sort of a breakthrough, but not very sure. Because, of course, the Chinese and the Iranian officials have also recently met. So let's see what happens there. In the meantime, I think countries are preparing themselves to meet the difficult situation. Like, yesterday, Trump said he wants to pause the federal gas tax, which means that they know that the prices are not going to come down, so they're adopting the fiscal route to give relief to the consumers. India has had the prime minister addressing the nation to conserve, oil consumption and adopt alternate modes of energy for travel, etc. So there are measures that emergency measures that countries are taking, which means that now the hopes of an immediate relief from the oil market is uh, growing out to be very pessimistic. So that's what we are dealing with. Markets are definitely now taken a negative view on the bond market because, as I said, same thing, oil prices going up, inflation is not going to come down, and we will see rate hikes hitting. Yesterday, in fact, the 3-year bond issuance by US did not receive a good response at all. And see, today in Japan, 10-year yields have hit a new 40-year high. So that and in order to add to all this, the political troubles in the UK is also seeing a huge sell-off in their bonds and rise in the yields as well. So perhaps if you look at the tech stocks going up, people are selling or reducing their exposure to the bond market and perhaps putting them into the growth sector, which they perceive will continue to perform better. So we look ahead to how the inflation is faring currently. In US CPI will be announced today, and India CPI will also be announced today. The month-on-month number is going to be higher in core as well as in core month-on-month as well as in the year. Of course, the headline number is probably going to moderate on a month-on-month basis because last month it was factored in. But the core going up is a real concern. That means there is a broad-based inflation. In India's case, the inflation rate is expected to inch up to 3.8 or 3.9% from 3.4%. So as other countries inch towards rates tightening, we have to wait and see what is the latest position of the RBI also in this regard. Currencies, no doubt, they are still on the rangy side. Yen has weakened again. This probably is in line with the oil price movement. There seems to have been a discussion between Treasury Secretary Besant and BOJ officials on the markets, including forex. But since nothing major has come out of it, I think market is now once again trying to push the yen towards the resistance at 158. It's interesting to see where it goes. Interestingly, despite the political troubles in the UK, the pound has held on its own. So that is actually a reflection of the overall dollar weakness as well. India market has reacted quite negatively to, you can say, a double whammy for the market because there was dwindling of hopes on the peace deal in Iran. And then, of course, the PM statement also giving some sense to the market that, probably the tougher times are ahead. And if you look at the PM's appeal, no doubt they are not the first time that we have seen. We have seen historically leaders, appealing to the general public in this regard, particularly the gold consumption, etc. However, if the public do heed to some of the appeals, points of the appeal, there can be some hit to the growth as well. So we may have to see a slower growth possible in the coming days because some of the industries who, for example, if you reduce the gold import, the jewelry industry can be hit, etc. So that's the market is now got additional reasons. So the rupee and offshore market has already broken into a new low at 95.59. The previous high was 95.43. Of course, there are also some report in Bloomberg which says that India is taking steps to shore up the forex reserves, like curbing non-essential imports of gold and electronic goods, hiking fuel prices, etc. And there has been ongoing discussions between the Prime Minister's office and the Finance Ministry, along with the Reserve Bank of India, on measures to limit the damage from the Gulf War. So while the markets are reacting in their own way, officials also, as I shared yesterday, PM speaking, may be a prelude to some more measures coming from the government as well. It's not just the general public that will bear the difficult times, but also even the industries will have to contribute their own. So that's what I think will come about. We'll watch out for that. But the rupee has no relief. Breaking into new high means that we'll move near term towards 96. Of course, we will wait and see if there is a intervention or if there is going to be some sudden measures being announced. Thank you.
Thank you, JK. And yes, so when it comes to risk, as JK mentioned, it's in selective pockets, especially those who are benefiting from this artificial intelligence boom. We are seeing Taiwan, South Korea, they are hot. That equity is doing well. So is Nasdaq. But the older sort of legacy companies, old economic companies, as you would put it, they are facing challenges due to the inflation. Iran US, of course, the expectation is getting difficult to bridge. It's sort of a stalemate. And generally countries are preparing to mitigate this difficulty from the war. US is also trying to give some release to gas consumers. Our own prime minister also asking people to conserve fuel. So essentially, hopes of immediate relief from oil markets is getting worse. Yields are rising all across. Today we have the US and Indian CPI to look forward to. Both are expected to print higher. And when it comes to India, of course, after the PM statement and the peace talks sort of going haywire, equities have reacted negatively, and even rupee it trades near all-time lows. Some reports from Bloomberg indicate that there are measures being thought to shore up flows and restricting outflows. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.